Good morning, everyone. I am Kamla Rampersad de Silva, Chief Executive Officer of the Caribbean Corporate Governance Institute, and it is my pleasure to welcome you to our series on governance of credit unions. We began these discussions 2 years ago and have explored a range of governance issues, such as training and characteristics of directors and the process of selection of directors for credit unions. This is because credit unions form a vital part of our financial system and is crucial to financial stability for many families in the Caribbean. Today's panel discussion will look at governance and risk with Pheuona Reynolds from the Jamaica Credit Union League, Lottoia Auguiste from the St. John's Credit Union in Antigua and Barbuda. First time we have a speaker from Antigua and Barbuda with us, so we're very happy to have her. And also we have Sherry-Ann Joseph from Harcourt Consulting in Trinidad and Tobago. I will introduce them all to you in a bit, but first, let me share that we are live streaming part of today's discussion on our YouTube channel, and we are also casting it on our LinkedIn and Facebook pages. So hello to everyone who has joined us via these media. Thank you very much to Warren Addison of Innate Talent Management for our social media support and for managing the live stream for us. I would also like to recognize the CCGI team, Laura Sinanan, Jacqueline Deschaussee, Quentrell de Silva, and Monique Romano for their hard work. I'm also going to ask Laura to please put the link for our social media channels in the chat. Laura, you can possibly do it just a little bit later on when I complete the opening remarks, as many of our participants are now joining us. But once you receive the link, I'm going to ask everyone, please click on the link and follow us and like our pages on social media. We have over 200 videos on our YouTube channel in particular. This allows you to be able to review past discussions and conferences, which adds to all of our understanding of issues and challenges in governance in the Caribbean region. Now, some of you present today are members of CCGI, and I want to recognize in particular the members of the PSCU Credit Union from Trinidad and Tobago. They were the first credit union to become an organizational member with a gold bundle membership here with us at CCGI. So we're very happy to have them. And we thank them and all of our regular attendees who have continued to join us for our sessions and give us their support. For those of you who are joining us for the first time, we are so pleased to have you with us here at CCGI and to share a very brief history. Established as a nonprofit membership organization in 2012, the Caribbean Corporate Governance Institute currently enjoys over 300 members from a range of private and public sector organizations across the region. These include persons from Trinidad and Tobago, Jamaica, Belize, St. Lucia, Guyana, the British Virgin Islands, St. Martin, and St. Vincent and the Grenadines. We host a range of workshops and panel discussions on evolving issues, excuse me, evolving issues in governance. We also have our signature event, Governance Week, and a two-day global conference. All of these are held online to easily facilitate persons' participation throughout the Caribbean region. This year, our theme for Governance Week is Governance in an Age of Generative AI. And as usual, we will be joined by over 50 leaders from the Caribbean to explore this very important theme. Our opening keynote is an international speaker. She is Dr. Fatima Abu Salem, a professor at the American University of Beirut, who brings tremendous expertise in the evolving area of artificial intelligence. We also have 5 amazing key speakers to open each of our 5 days of conference. On Monday, June 23rd, Eldon Marks from Guyana will speak on governance and management relations in managing generative AI. Tuesday, June 24th, Ricardo Allen from Jamaica would look at governance of the private sector. Wednesday, June 25th, Javed Sajad from Trinidad and Tobago would look at, he's a legal consultant with AI, and therefore he would be looking at governance of the state sector. On Thursday, June 26th, we have for the first time joining us from the two countries very close to the US Virgin Islands, because initially I thought they were. This is Statia and Saba, actually two Dutch Caribbean islands located very close to the US Virgin Islands. So Daniela Richardson is also the president of the Chamber of Statia and Saba, and she will be speaking as we focus on governance of SMEs and family-owned businesses. We end Governance Week on Tuesday, June 27th, as we turn our attention to governance of groups and conglomerates. And our opening speaker on that day is Patricia Rowe Seal from Barbuda. We would like to thank our various sponsors for Governance Week 2025, and these are Massey Holdings, returning as our platinum sponsor, Trident Trust from the British Virgin Islands, a silver sponsor, First Citizens Bank, returning as a silver sponsor here in Trinidad and Tobago as well. Angostura Holdings, returning as a bronze sponsor. Republic Bank, returning as a bronze sponsor. J.A. Rowe and Sons from Belize, also returning for the second time as a bronze sponsor for Governance Week. And also PwC, Trinidad and Tobago, returning as a bronze sponsor. We thank all of our sponsors for their support, because Governance Week enables us to really discuss and unravel a range of issues facing us in the Caribbean region. Alongside this, as mentioned earlier, we do run a range of workshops and panel discussions. At the moment, we are offering our modules in corporate governance, which covers all of the fundamental principles that one should know if you are involved in serving a board or being part of a board or supporting as an executive. Okay, so we look forward to persons making inquiries about how you too can do these modules. It will be offered again in October this year. We have a workshop on financial stewardship for directors and officers, and this is geared specifically for those persons who don't have a background in finance. This workshop will be facilitated by Howard Dutton on July 23rd. And we end our series on the role of the board with Dr. Chris Pierce from the UK, who will deliver a workshop on leading effective boards. And of course, we also have workshops for corporate secretaries, looking at their role and function, as well as drafting minutes and other corporate documents later this year. So I invite you to visit our website for details on these and all of our other events which have been opened for registration. And if you are not yet a member, do consider joining us and actively contribute to the conversation on how we can improve leadership and governance practices to achieve sustainable outcomes. Persons may join us as an individual member, or your companies may choose to pay for bundle membership, same way that PSCU Credit Union did. And this bundled membership can cover from 6 to 12 members. Now, just before we start our panel discussion today, I would like to make a few housekeeping announcements. And these are what we generally do for all of our sessions. We'd like to ask all of our participants to please ensure that their name is correctly captured on their screens. We are in a virtual room together, which allows each of us to engage and access freely with the other participants. So it's important that everyone is easily identifiable. We would also like to ask everyone to keep their microphones on mute throughout the session. During the Q&A segment, if you wish to make a comment or ask a question, you can raise your virtual hand using the icon at the bottom of your screen. You will need to unmute yourself. And then after you've completed your contribution, please press your mute icon again in order to minimize any disruptive noises in your background. But of course, throughout the session, persons are invited to make comments or questions in the chat, and these will be brought to the attention of the panelists as need be. Now, those of you who need to earn CPDs or PDUs as part of your ongoing certification, you may use these sessions to claim your points. We do provide certificates of participation to everyone, generally for our workshops. We have started doing so for these panel discussions as well. But do note that the certificates are only issued if you have been registered for the session and if you have attended the entire thing. Okay, now we would also put a survey link to the end of today's session. We would really appreciate if you take 2 minutes and give us your feedback, please. It's important to know if we are meeting your expectations and any other feedback that you may wish to share with us. Now, at this time, I would like to briefly introduce our panelists. Now, their detailed profiles have been, it's on the agenda that was sent to most of you who received the link earlier today. Laura, I'm going to ask you to place it in the chat so persons can have access to the full agendas. I will be doing a brief introduction of our panelists, so of course you can get more details in the agenda. We begin with Sherry-Ann Joseph. And Quantrell, if you can highlight Sherry-Ann's video. So I am happy to share that Sherry-Ann Joseph is a sustainability, governance, and risk management professional, and she's a senior partner at Hakon Consulting here in Trinidad and Tobago. She's a chartered accountant with the Institute of Certified Chartered Accountants of Trinidad and Tobago and a fellow of the Association of Certified Chartered Accountants of the United Kingdom. She holds a master's degree in business administration and a Master of Science degree in strategic planning from Heriot-Watt University in the UK. Sherry-Ann is currently completing her Doctor of Business Administration, specializing in governance and sustainability. She has over 25 years of experience in credit unions, with 15 years at an executive level with a command of strategy, risk, and financial management. She's passionate about using her craft to provide value-adding support to the organizational development of her clients to enable them to become resilient and enjoy sustainable growth. Now I'd like to introduce Pheuona. Just before I get to Pheuona, I want to share, I'm seeing a message from Lottoia that one of her participants is attempting to get in. Lottoia, can you please ensure that she's using the link that I sent to you this morning, because our team would have already allowed all persons in the waiting room to be able to enter, okay? So perhaps she is not using the correct link. So Pheuona, I'm happy to now introduce you to our participants today. Pheuona Reynolds has been with the Jamaica Credit Union, the Jamaica Cooperative Credit Union League for approximately 23 years. Her tenure spans the role of examiner in the stabilization unit, supervisor in the business advisory unit, technical services manager for the Centralized Strategic Services Limited, and monitoring and risk management and risk assessment manager in the stabilization unit. These roles have seen her primarily assisting credit unions in a consultative and resource advisory capacity, specifically undertaking assessments of credit unions' operations and analyzing credit unions' financial statements and liquidity reserves requirements, facilitating strategic retreats, forgive me, providing training, providing and reviewing internal audits and reports, developing policies and procedures, assisting with the implementation of a risk management framework within credit unions, and reviving the Risk Managers Association. Pheuona holds an MBA from the Nova Southeastern University, a BSc in Management and Accounting from the University of the West Indies, Mona, and is a certified international risk manager and certified anti-money laundering specialist. She's also been trained as a fraud examiner. And now I'd like to introduce our third panelist for today, and she is Lottoia Auguiste. Lottoia has over 25 years of experience in the financial sector. A proud citizen of Antigua and Barbuda, she describes as the land of 365 beaches. Lottoia began her career as a teller and has progressively advanced through various roles. Holding a master's degree in business management with a focus on banking, along with a certificate in international risk management, Lottoia has developed a wealth of experience in operations management, strategic planning, and process optimization. Over the last 9 years, she has worked at the St. John's Cooperative Credit Union, one of the leading credit unions in Antigua and Barbuda. In her role, she has been instrumental in overseeing critical operations, driving process improvements, implementing innovative solutions, and ensuring compliance with industry standards. And of course, beyond her professional achievements, Lottoia takes great pride in mentoring staff and empowering family members, whom she considers her personal success stories. So, as you can see, we have 3 persons who come with a diverse range of experience. So I really look forward to their thoughts as we look at governance and risks in the credit union sector. So we will begin with Sherian. Sherian, we are very happy to welcome you here at CCGI, and I invite you to share your thoughts with us.
Thank you so much, Ms. Rampersad, and good morning to all the participants. It is indeed a pleasure being here. So I want to start by saying make governance, risk management, and compliance a strategic asset. And what do I mean by that? Oftentimes, when we ask, what is the greatest asset within your organization? Your response would be a lot of different answers. Maybe people, your resources, your membership, your asset base. But compliance, governance, risk management, I would say at this point in time and where credit unions are heading, is one of the greatest strategic asset any credit union can hold. Credit unions have been in existence since the early 1940s within the Caribbean region. And in Trinidad and Tobago specifically, since 1941 or so. So approximately 80 years after, we are seeing credit unions have grown significantly to become not just an opportunity for our members to save and have access to financial services, but also becoming more sophisticated and professionally run organizations. From the perspective of governance and risk, one of the major issues is the growth of the sector in Trinidad and Tobago in terms of asset size, the product offerings, the type of loans that are issued to our members, the strategies that are adopted to attract younger members, the younger membership, that has outpaced the legislation that we are currently operating in and what the legislation caters for. So governance starts with legislation. That is where you start when you are thinking governance. This is where it starts from. So given the rapid pace of development, to ensure the sector can continue to be sustainable, It is critical to ensure that the requisite level of governance, risk management, and we're throwing in compliance is in place. Governance is an ecosystem that embodies legislations, regulations, policies, procedures, the processes, and most importantly, the fit and proper of the leadership and the management positions within credit unions. A conversation around governance in credit unions really starts with what are the improvements and sustainability within the organizations that is really required. So the question is, how can the existing gaps within the existing legislation, the policies, the procedures, your processes, and the fit and proper attributes of the requisite components within your organization be dealt with, or those gaps be closed? These gaps create the risk for credit unions. Inherent with the growth of the sector and comes with it associated risk. And as credit unions grow, the potential for risk increases. So now, whereas once upon a time, what we would have seen is credit unions were small and managed basically by directors or elected officers, or a manager and a small group of employees. With the product offerings that are in place now, the technological channels that are being used to reach and engage the membership, the diversity of the membership, this comes with a certain type of risk that cannot be managed the same or assessed the same. Credit union faces various challenges that forces the leadership team to respond, and in the absence of strong risk management embedded within the strategies of the organization, not just in your daily operational activities, but in your strategies. This, once it's not adopted, created a diverse set of risks, and the impact to the organization operation and its financial performance is negatively impacted, which brings about your reputational damages, your financial losses. So the fundamental, in my view, is really the risk of sustainability of the credit union sector in its ability to not just attract younger membership, but to continue engaging the younger membership and to keep the younger membership. Strategic leadership to drive and sustain the growth of the sector. This is a burning issue within the credit union sector. Leadership must evolve in tandem with the changes that are evolving in the external environment, not just internally, but externally. So leaders must move away from strategic guessing, using data and information to make strategic decisions. Collective mental perception risk. This is another key area. The growth of this sector demands a different type of thinking. Credit union should not be seen as an institution that caters for members who cannot access funding from banks, but as a viable option for all savers and borrowers. There's a dire need in place to change the way things are done within the credit union sector to meet industry standards, best practices. While credit unions are not banks, we operate in the same space. We offer similar products, one with greater financial resources than the other. That's the only difference. So to grow and sustain the sector requires an adjustment to the way credit unions are run. There must be an alignment of the governance and risk management of the credit union with industry standards. We also have situationally sectorial risk, which requires credit union to tailor-make their operations, operating ecosystem to match the current realities. Otherwise, we will be stuck in a 1970s legislative guidelines. What ensures sustainability under the umbrella of governance and the umbrella of risk and its components is an effective compliance regime. And again, you can have proper governance, you can have proper risk management in place without that compliance element of it, then there's an absence of a control environment. So in the absence of the compliance regime, the sins of governance, as at Hakon we love to say, the sins of governance, the sins of commission, sins of omission, and your sins of submission will elevate itself. So when you have or you lack a compliance regime, you can commit to an act in the absence of this regime, or a control environment that is not in place, you have financial losses. Sins of omission, this is where you omit, or the powers to be omits to do certain things. For example, failure to establish a control environment from an external perspective that can detect or prevent the opportunity of risk within the credit unions. And then the sins of submission, where when in the face of things going wrong, it eats away at the sustainability of the credit union. So these are some of the key areas or the currency of issues that pervade the sector of governance and risk. And I will pause for now.
Thank you so much, Sherian. Those are some really good points. You know, you pointed to gaps, especially that is created by legislation that's not been updated to take into account some of the current needs of the credit union sector. And I like that you also spoke about leadership and the importance of using actual data in decision making. And I like those last 2 points in particular, sins of omission and sins of submission. We'll be asking you to elaborate on those in a bit when we come to the discussion later. At this point, however, I would like to invite Pheuona Reynolds. Pheuona, as those of you would have heard earlier, is joining us from Jamaica. It's her first time as well serving as a panelist with us at CCGI. We're so deeply appreciative of having you, Pheuona. And so I'm happy to pass on the virtual lectern to you now.
Thank you, Kamla, and good morning to everyone. So much of what Sherian has spoken about in terms of, ensuring that you have those good governance and management and leadership in place, components in place. From our perspective, the stabilization unit at the Jamaica Cooperative Credit Union League, which is the National Association of Credit Unions here in Jamaica, what we seek to do is to really prepare our leadership, the board, the committees, individual staff members to rise to some of those standards which Sherian would have spoken about. So we have been engaged in a lot of training at the various levels to ensure that the persons who are called to lead and to serve the members, that they are sufficiently aware of their role and how to carry that out in light of the, just the space that they operate in, that it is really a very heavily regulated space. And it's getting to be that for us in Jamaica as we await the impending act to have credit unions have that oversight by the Bank of Jamaica, which is the central bank. So for many years, we have been engaged in training our directors, our other volunteers to, incorporate these aspects of governance, good governance practices within their credit unions. We have really looked at various different arms of governance. So just, yes, general corporate governance, but now we speak of this matter of risk management and specifically enterprise risk management, which is very key in this financial sector which credit unions find themselves operating. And what we have found is that the regulatory requirements have moved towards looking at a risk-based approach to monitoring and for credit unions to manage their own affairs. So what we have sought to do well, since 2014 actually, is to help our credit unions here to build out a framework for compliance in terms of risk management. And we have taken that through different tranches. We started in 2014. We had another re-engagement in 2015 because we found that we were not getting the kind of traction that we would have needed. And also we did another stint in 2021. And that is where we have now seen that that engagement is a little more solid. We're seeing from the governance side that improvement in terms of recognizing that risk management is one of the key principles that you need to embrace to ensure that your credit union is operating safely and soundly. And so we can speak a little more to, you know, what exactly has been our experience from those three approaches that we have gone through, and what are some of the challenges that we would have seen out of those engagements. But we're heartened to see the improvements along the way and to continue to support our credit unions in that stead to build out this framework, as I said, which is very, very crucial at this time.
Thank you so much, Pheuona. So I'm happy to hear about the work that's been done by the League in Jamaica. I know that in Trinidad and Tobago, the League as well is busy here. I know Donna Todd from Guyana had also indicated an interest to be present here. So Guyana too has been doing quite a bit of work in terms of preparing the credit unions. So we'll talk a bit too when we come back about the regulations, because you spoke about it being a heavily regulated space and an impending act that will move oversight to the Bank of Jamaica. In the interim though, let's hear from our third panelists, and then we'll come to open up the discussions a bit more. So Lottoia had joined us for a panel discussion we had as a guest earlier this year. And I was so impressed and happy with the questions. I thought about inviting her to actually speak on a panel. And then more so when she spoke about the beaches in Antigua and Barbuda, I was like, you know, let's invite you here to speak virtually. But then we need to plan how do we get to come and experience some of those beautiful beaches you have. Lottoia, I'm happy to have you here for our panel discussion on governance and risk in credit unions, and very happy to pass on the virtual podium to you now.
Good morning, and well, it's afternoon now, sorry, and greetings from the land of 365 beaches, yes. And I am happy for the opportunity to share on the topic today. And so I want to begin by outlining effective corporate governance. And I will say to you that it is fundamental to the stability and success of the credit unions and is essential for its safety and soundness. All right, it encompasses strategic planning, risk management, financial oversight, human resource management, compliance, accounting systems, and it is very crucial to the organizational objectives and maintaining the members' trust, because we always have to remember the reason why we exist and the reason why we're here in terms of improving the lives of our members. It helps to maintain profitability, competitiveness, and resiliency to changing and economic market conditions by incorporating the objectives, the policies, and the risk limits that are appropriate to the size, complexity, and risk profile of the institution. The directors are responsible for providing a clear governance framework and monitoring the extent to which officers and employees comply with this framework and the applicable laws and regulations. In Antigua, the governance structure includes the board of directors, the supervisory and compliance committee, the credit committee, the management team led by the general manager, and we also have the internal auditor function, we have the compliance function, and we have in recent times seen the need with everything with risk management and enterprise risk management, that we should include the risk management function as a full-time function and not that is just directly related. And risk governance, risk management is everyone's business. Every manager, every staff has to look. We have to change our perspective. Credit unions are now considered significant financial institutions. And so we have to change the way we govern. We have to change the way we look at things. We have to change our perspective. We have to change our planning. So it's important that at all levels, training and opportunities for growth and development resonate and they're there available to all persons. The governance structure ensures that we have a balanced distribution of responsibilities, promoting transparency, accountability, and effective oversight within the credit unions. And as I mentioned, we're significant financial institutions. So even in recent times, the IMF, the International Monetary Fund, they did an assessment and they have emphasized the need for further reforms of credit unions in the sector to strengthen oversight and ensure long-term financial resilience. Recommendations to include adopting a more risk-based supervisory framework, improved monitoring of asset quality, and enhancing governance and risk controls. These efforts aim to align credit unions with regional standards and promote financial stabilities. But in Antigua, we are forward thinking, and so we would have already begun to engage and to equip our leaders with enterprise risk management and working towards our risk registers and ensuring that we have a comprehensive view on risk and the impact it has. We understand that we have to strengthen policies and procedures so that we are ready with the risk. We are looking into the digital platform, and with the age of digitalization, where we want everything for members at the fingertips, we want to have online access, mobile, we want to onboard members via the digital platform, we want to lend them via the digital platform also. We have understood that it comes with risks. We are entering charted waters that we have never entered before. And so with this exposure, this new exposure, we have to ensure that we're equipped. We have to ensure that we have technology that is geared towards protecting and, detecting. And so it is critical that we understand the risks, we understand governance, our leaders understand governance, and so that we are very equipped to handle every obstacle that may come our way. We are also cognizant that we cannot pick up every risk, but we are saying that some risks we will ensure that we are insured for, that some governance, some insurance is there to cover those areas. However, we want to look, we want to analyze, we want to be equipped that anything that comes our way, we have a strategy. So we're strategizing, all right? So when we have new volunteers, new directors, we want to ensure that it starts from the beginning, that they too understand the credit union movement. They have a history. They know where we're going. They have our strategic plan. They have our financial, they have knowledge. We understand that each director may not come with all of the necessary skill sets, but through training opportunities, we give them and we ensure that we do retreats so that everybody, each and everyone will be able to learn from each other. We understand that there's certain key skill sets that are needed in terms of analyzing the financial statements, leadership and management, so that you're able to review the reports that are submitted and make meaningful contribution. So gone are the days when you have volunteers coming on board and the skill sets are limited. We're ensuring that you have that strong foundation. Yes, we give training and we know that you will grow and develop over a period of time, but we ensure that you have a foundation and we build on it. We understand the importance when newly elected volunteers are there And so they should understand everything that governs the credit union over a period of time. So we hold their hand, we guide their hands, and we ensure that they can make their meaningful contributions. It's not, they have a fiduciary duty of care for the credit union, care, concern, and if it is that anything should go wrong, these directors are somewhat responsible, and some of them have the major responsibilities. So it's important that they understand their fiduciary duty, they understand what the sector is about, they keep current with market trends, and they keep up to date with what is happening in society, that they can make informed decisions. All right, so we are very, in Antigua and Barbuda, we're part of the credit movement. We ensure that with CCCU, that we stay with training and training opportunities. And so we keep abreast with what is happening in the society. We do a strategic plan, 3 to 5 year strategic plan. And we think that is important, that there's collaboration between directors and management to ensure alignment of synergy in executing the strategic plan, contributing to the credit union's success. A partnership, it's a partnership between management and the board of directors, and it helps to ensure that credit union operates optimally and remains successful. Each arm of the leadership cannot exist without the other, so it's critical that we work together and that we understand our fiduciary duties, and we understand that we're here to serve members, and in terms of everything in the market, in terms of risks, that we understand, we interpret, we explore, we get experts to help where it is that we need advice, so that we can make informed and strong decisions in the best interest of our membership. Okay.
That's great.
For now, until I...
Thank you so much. I think that was a really, really good contribution. We have understood how your unit in particular views the role, forgive me, between what you do and the board as well, to ensure there's that partnership and understanding risk overall and how it is managed. And I like how you grounded it in the purpose. Why directors there, the impact of the credit unions on people, and therefore why it is important for all of these risks to be managed. So Quantra, let me ask you to bring on our other panelists on screen as well. So we moved to a little bit of discussion before we open it up to a Q&A with all of our participants. And just before we go there, I want to thank Laura. She has put the link to our social media pages on the chat. So I want to ask our participants, if you don't yet follow us on social media, please click on those links and give us your support, like and follow the pages so that we can grow our presence, and so be able to strengthen our influence in the region as well. Now, as we come back to the actual discussion, several really great points were made by all three panelists. So I'll be looking at different ones, but I want to start, Sherry-Ann, there was a critical point you made, which I'd like to hear from you and the other panelists as well. So we can talk about the risks in many forms, particularly financial risks, compliance issues, and regulation. But let me go to another one that you mentioned. And this was growth and strategies to be able to attract the younger generation into the credit union movement. Because traditionally, it's really been the older persons who are aware of the value of the credit unions. And so I want to ask you a little bit about that in terms of what are some of those strategies? Is it effective? Are we seeing more younger employees joining the credit union movement?
Yes, so very good question, because that is one of the greatest risks right now in Trinidad. And I think it's not just Trinidad, it's throughout the Caribbean region where we see the agent membership being present. And in most instances, all credit unions that I've been part of, interacted with, are doing all that can be done from a marketing perspective to bring on board the younger members. However, when the members walk through the doors of the credit union, keeping them, holding them, it's a challenge because they no longer, you have your agent memberships, they are very loyal. So when they walk through the doors, they feel that family bond, that is like their activity at the end of the month or during the course of the month. The younger generation or the youth, they don't want to come in and have a conversation. They want to be able to access the different services. They mean business. They want business. And one of the approach that some credit unions would adopt is really using the technology to interact, to engage with the members. However, when you don't educate these younger members to really understand and appreciate the philosophy of the credit union, what the credit union really stands for, what are the benefits, what are their role, and that in itself, what we see happening, it creates a governance issue where you have new individuals come and join in the credit union, not being aware of what the philosophy or what is driving credit unions. They come with their own agenda, if it's just to do business or to be part of the leadership team. And not much is being done to build the organization. I love what Lottoia said with forward thinking. I mean, I've had the pleasure of doing work with Lottoia and I can tell you they really do think in the future. And that's where credit unions are heading now, where the younger generations, they are our future. And if you want the credit union to survive, you have to adopt the strategies, which is really with technology. You have to make your product offering, as we would say, as sexy as can be, so that these younger generations will look at what the credit unions are offering and they want to be part of it. They don't see it as just an opportunity to get a loan or to be part of a deposit account, but to really build their own future, create products that will attract them, that will speak to the future of that individual. Some credit unions would say, let's take a child from school and encourage all the different important areas of their lives or the parts where you're going into university, you need a loan. You're going into creating your own family. This should be a conversation, and it can't be done if you don't have the data to drive those decisions, to drive those strategies. What are the risks? These are considerations that must be done. You're not going to just create a product because the banks are doing or other financial institutions are doing it. You want to create products bearing in mind that it comes with a certain level of risk. So to attract the younger generation, you have to ensure that you understand, you assess what are the risks that we are entering into, what is the governance that we need to drive that so that you can hold the members. You have to educate them. Yeah.
Thank you, Brian. I actually can attest to what you were saying. I have made it my business to attend some of the annual general meetings for credit unions here in Trinidad and Tobago. And you do see that age difference. And I do see exactly what you refer to in terms of that culture. Persons who walk into the credit union and it's like, this is my second home. I know everyone. I expect to be treated a certain kind of way. And so, which is very different from the expectation of the younger generation. Pheuona, what is happening with respect to attracting the younger generation in Jamaica? Are you seeing a similar pattern as there is in Trinidad and Tobago with respect to primarily the older generation being the members?
Yes, that is actually so here for us as well. The average age of our movement is around 55. And so from the league's perspective, our marketing and communications department has been driving a lot of awareness and involvement of the youths. So annually we do our surveys and we get the feedback. And we have been very deliberate in strategizing to, get the youth into the movement. The challenge, however, is the technology to support the kind of you know, as Sharian said, the want it now kind of culture, the at your fingertips kind of service. So that has been the challenge here. But in terms of, you know, getting the involvement, getting the participation, we have actually been involved in creating, our marketing and communications department has what is called the next gen kind of a, let's call it association, right? Where we are building out those youth employees in terms of developing their own appetite for governance and to lead them through the history, the development of the movement, how they can participate, not just as an employee, but to look at other opportunities and to really get them involved in community development and outreach. So from that level, we are building it internally within the credit union movement, but of course, again, using the different platforms to reach the general youth members out in the public. So the Instagrams, the all of the social media handles, we are really doing a lot there to drive the awareness and the continued involvement of the youth. But again, as I said, the challenge is when we do get them in, do we have the technology to support them in the way that they need to be supported or they want to be supported? And we're actually looking at that as one of our key strategic objectives to see how we can advance that a little further.
Thank you, Pheuona, because of course an agent membership is a major threat to credit unions. Growth is essential, and therefore you need to ensure that that membership, you know, brings in the younger generation who will be the one to propel continued success. So Lottoia, clearly there's that awareness with your credit union, and you spoke about the use of technology in order to provide the kind of digital products and services. So there are two risks associated with that. One, of course, will be cybersecurity risks and the cost associated with keeping your systems safe. But there's another risk that I want to talk about, and this is how do you maintain the values of the credit union movement, the sense of family, the sense of commitment that this is a very wholesome type institute. So you're not a replacement as a bank. So that's a challenge that the credit unions will face as they move away from the traditional persons come through the door, know everybody, greet them by name, into an online environment where you become really faceless to your membership. Is that something that has been considered? Are there particular strategies that you are looking at with your credit union in Antigua and Barbuda?
Yes, Kamla, thank you for that. In terms of our credit union and developing, we understand the importance of our membership. And so one of the things that we often discuss and to see how we can, yes, we want to ensure that members are utilizing technology, but we understand that they need to come in, they need to be a part, they need to have that family feeling. Because when we do through surveys and communication with our members, that's something that they would declare that they want. They want to be able to have dialogue. And COVID has taught us that, you know, when persons couldn't come in and they were locked out, persons felt that they weren't a part. And so frequent meetings with our membership, you know, we're trying to utilize technology. So we'd have Zoom discussions. We are on Instagram, you know, because, you know, the young following's there, and we understand that the future is with the younger persons. And so we have strategic goals and objectives in terms of the certain categories to be able to get them, because if the older persons move away from the credit union, they're deceased, you know, it affects us. And so we promote, we push from in the kickstart through the schools, right? And then when you get to 18 and 30 to 35, we're focusing to try to have products and services, but we're not just we're gonna ensure that we have that avenue where they can come in and where we can have that financial counseling, because some of the products and services that we offer, which are unique, you know, to credit unions, we have to maintain them in terms of the financial counseling, not just giving them products, but ensuring that the products are designed for them, giving them that voice at the annual general meeting, having those forums to educate them, show them partnership for growth. So we promote our small business members, and we are in the schools, we take opportunity to develop and educate our membership and the community at large, so that people would watch on and say, I want to be a part of that credit union movement. It is dynamic. And so we pride ourselves in saying that we're trendsetters, we're trailblazers, and the other institutions need to watch and follow as we lead.
Very good, Lottoia. I like that a lot in terms of the whole package of not just attracting the younger generation, but using the technology to build that one-on-one relationship still, whether it's via Zoom meetings or going out to where they are, meeting them there, inviting them to come back to the credit union as well. And I also particularly like the idea of financial counseling as being part of the package, of what is offered to young people, and to build their own skills and competencies as well. It is just about 12:30, so we have 1 hour more to go on the panel discussion. So I just want to share with our participants, we are opening the floor now to the Q&A segment. So if you have a question or a comment, you can feel free to raise your hand using the icon at the bottom of your Zoom screen. You can make your comment or question in the chat and we will read it out. But please ensure that you mute your microphones if you do speak with us, so that there's no disruptions afterwards, okay? So as I wait to see whether persons will raise their hands, Pheuona, I want to come back to you with one of the issues you rose and which we'd like to hear a little bit more about. You spoke about the whole idea of enterprise risk management and having started a program in 2014 to build compliance for the credit unions. And then you said, but it was a little difficult to get that level of traction in how the credit unions themselves should look at their compliance issues. But you saw better responses by 2021 when the program was repeated again. Can you share with us a little bit what might have accounted for that? Was it different strategies used by the league, or was it a whole different mindset of individuals because we had just been through the COVID pandemic?
I think for the most part, it's this strategy that was employed in 2021. Initially, what we did was to look at, just forming a group from credit unions, small, medium, and large, and we would have representatives from those credit unions sitting on a panel to look at what are some of the key risks for some of the business processes that they would commonly do. And so that engagement would have involved each participant to, really put their thoughts together and to have that group deal with the processes and identify the risk, what would be the mitigants and so on. But we found that, again, perhaps because the whole education aspect or awareness aspect of risk management was not very deep at the time, we found that the traction was not there. So we developed the templates, and distributed them, but it didn't go anywhere. We didn't see the practical execution of the ERM in the credit union space, the reporting of the risk that they would have been seeing and how to treat with that, how the board and different risk committees got involved in the process. So that was some of the shortcomings that we saw in the 2024 methodology that we used. So we said, this was too important an aspect of governance that needed to have some more force behind it. So in 2021, we re-engaged with consultants again to assist us in the project. And what we did this time was to actually lead pilot implementation in each of the categories. So one in the small, one in the medium, one in the large credit unions. And then we would replicate that our team internally from the league would replicate that throughout the movement. At the time, we had 25 credit unions. So it brought a more specific and direct working with the individual risk owners in their space. And we found that that was a better approach, and we got the end results, we got the deliverables from that, and we continue to see in a more direct way, I would say, we're seeing improvements in the risk owners actually accepting and realizing that they have the responsibility to monitor, to identify, to assess the risk within their functions. So I think the approach is what would have helped a lot, but also because, again, there is this more supervisory change towards a risk-based framework, and that is important.
Thank you, Pheuona. So clearly it was useful to go in and actually do some of the work so they understood what was required of them. Very nice. I see that Tamika Thomas has her hand up. So Tamika, I want to invite you to unmute and let us know where you are from, and then you can ask your question or make your comment, please.
Okay, good evening, good afternoon rather, Ms. Rampersad and fellow participants. The conversation is going quite well. I'm from the Insurance Industry Credit Union. I'm the general manager. So I just wanted to engage on one point actually, and just enhance the conversation. So it's not a question. So like everyone else, we are experiencing that aging membership, right? Aging boards, members of the boards and the committees. And it's quite practical right now. So for instance, I have some hires, I'm recruiting. So I think one of the things that we should think about is also employing younger persons. So we need younger employees because I think they are going to attract the attention of the younger members. Another item, which, you know, it's sometimes a touchy subject, is the training of staff. So while we talk about technology, I mean, we just launched a digital platform. Not that we didn't recognize it, but we have members of staff, we have employees who need to be trained up, right? So it's not just a matter of we're going to have all these youth members trying to get into the credit union, but if we do not have our employees trained up as well, and mind you, I'm quite aware it is going to be a challenge. There are persons who are afraid of doing anything digital, right? So we also have to look at our internal capacity there. And then the third item, another unsexy topic, is the succession planning. Succession planning does not just come from us as probably on a committee on HR, human capital, trying to drive succession planning. Succession planning, we need to get that from our 70-year-olds, our 80-year-olds, our 60-year-olds on the board and committees. And we have to have buy-in from those aging members to say, hey, we really need to train up our youth. We need to train up our youth membership. And it's not just a handover to a training facility to train them. We have to have the buy-in first. We have to accommodate that type of training, our seniors, to make it worthwhile for our members, our youth members, right? We want to create a legacy, right? And we want them to create a legacy as well. So those are my points. Thank you.
Thank you so much, Tamika. Those are really, really great points. The recognition of the challenge of the agent membership and, of course, the mindset of staff to be able to embrace the new technologies, if it's going to be effective in being able to provide the kind of service that would attract the younger generation. And I particularly like your third point of succession planning, not being something that reside in the HR component of the credit union, but even moving so far as mentorship from the older experienced members who will be able to pass on their love of the credit union movement to the next generation. I see Michelle Bedo has also unmuted. Michelle, did you want to make a contribution as well?
Hi, sorry, that's an error, sorry.
Okay, no problem at all. So then let me ask our panelists to respond to some of these points that Tamika made, but particularly I want to come to the issue of the digital platform. There are two areas there that we need to explore. One, of course, is the changed mindset, which Tamika mentioned, but then there's also the cost to the credit unions, the cost of investment in the platforms, the cost in training staff, the cost in ensuring that you have safeguards in place to prevent cyber attacks. So what would be your thoughts? Pheuona, well, I'm sorry, we did start with you earlier, but let me come quickly to you because you're with the Credit Union League in Jamaica. What is the general advice that the League will give your members? And then we can ask Sharian and Lottoia to also speak to, how you go about setting up those safeguards and managing the costs associated with the digital platforms.
Boy, so that has been one of the biggest challenges for us, because we know that credit unions are getting a little more sophisticated as well. It's not just the plain vanilla. So in terms of the product and services that they want to offer, they need the technology to support that. But of course, that's going to come at a cost that, is not something that they'll readily be able to afford. So from the strategic planning sessions that we've held, and this includes our credit union member societies, one of the key pillars, as I said, one of those key strategies was to look at technology improvement and how, as a movement, we can reach to a place where we perhaps will have one system for all credit unions to use. It's something that we've looked at before. It didn't quite work the way we wanted it to. So again, this is another re-energizing of that idea of seeing how best we can get a system that will support all credit unions, for the various complexities or differences in the offerings that they have for their members. And so the shared cost is something that we think would be able to, will benefit from the economies of scale there. So it's something that we're actively working on from the League's end, of course, to also get the full buy-in of the credit unions from the initial stage, so that we scope the system accurately and in keeping with their requirements.
Thank you, Pheuona. I love that idea. A common platform so there can be shared costs in the industry itself, that would allow everyone to benefit from the economies of scale. Sharian, what would be your thoughts on management and use of digital platforms?
So as far back as, say, 10 years ago, we in Trinidad have been speaking about shared services. And it's unfortunate that we really did not adopt the approach that was taken by the Jamaican League to really drive it, because there are a lot of potential, there are a lot of resources available to the collective body of the credit unions or the sector on a whole. If this is done, then the cost to any one organization is not going to be exhaustive, because when you look at the opportunity, the risk of not doing anything, it far outweighs what the cost could be. So I think that is where it starts. And, when we look at it from the perspective of governance, that is a major part of governance, the leadership role. And without proper leadership, it is going to be a challenge. And we are seeing not just for the younger generation, but just to remain competitive in the financial space. Technology is what is driving everything. You are exposed to cyber risk. Can anyone, you have just a few credit unions in Trinidad who can really bear the cost. And some of them are really doing all that can be done, proper IT governance strategy in place. But then as one credit union, as compared to a collective body of credit unions, if one credit union or a few of the credit unions are exposed to a cyber attack, it's going to impact the entire sector. And this is where coming together is most important. You know, you have the senior leadership of the credit union sector. That conversation between that leadership group and the entire body is critical, coming together and making it happen. Technology is the greatest, or could create the greatest risk for credit unions and any financial institution. So coming together and delivering that platform is what is required. And as I said, 10 years now, plus that conversation has been happening. And I can't say that I'm aware of any credit union that would have actually I guess, maybe worked with other credit unions to really say, let's go forth and get it done. It takes a leadership at that higher level to do it.
Thank you, Sherry, and I like that idea. So I'm hoping that the other credit unions present here will be able to contribute their thoughts as well. You know, how willing will they be to engage with other credit unions with that? But Lottoia, let's hear from you. What is happening in Antigua and Barbuda with respect to this approach of shared services?
All right. So in Antigua and Barbuda, the Cooperative League has been championing shared costs, and it's for the buy-in of the credit unions. We have two large credit unions while the others are smaller, and so the cost is mainly shared between the two. So even when we looked at our enterprise risk management framework, we partnered through the league. It was organized through the league, and we're able to do that and share the costs so that all credit unions could be a part of it, being forward thinking. In terms of our technology, we have been having discussions in terms of, you know, sharing costs, but in terms of each credit union having their unique list to offer their members, we have not reached the point where we are really focusing, or we have got the buy-in to share costs in that area. However, we are still having the discussions and championing it. As recent as last month, we had discussions at the league where we had opportunities there about what's happening and, you know, the different digital platform. In terms of costs for the digital services, in terms of the ATM and software and all of that, they're very expensive. And so in terms of educating our members, communication with our members, buying from our membership, in terms of where we want to go with the credit union, because they're making demands on certain products and services, and they also need, based on their needs, we have to be able to cater to those needs. And so if we keep them engaged and we understand and we are clear with the direction of the credit union, we're thinking that we could, in terms of cost, so we could share costs at the league level among credit union, but in terms of shared costs for the membership, where we have that buy-in, we have that communication, and in terms of the fees, they're not seeing them as rigid or expensive or hard on the pocket, but they understand that they're short-term investment that the credit union would need to make, and as a part owner of the credit union. And so that's what we use in our discussion, that you're owner, and so you have a vested interest in the success of the credit union, and we need these products and services to be able to go head on with the banks, right? And we are geared towards improving their lives. So we're trying to do that partnership so they understand where we're going, what we need, and how we will get there. So we're all in it together.
Okay, thanks, Lottoia. I actually am seeing that Angela Stew had put a comment in the chat asking for persons to share their use of AI technology, which is considered both a risk and an opportunity. And AI, of course, is still an evolving area of the technology. How exactly is it going to be able to help the movement overall to be more effective would be something that we will see unfold over time. So if any of our panelists has any direct experience with the use of AI as part of the services that they offer, we'd be happy if you can elaborate on that as well. And I am also seeing that Aline Popperwell, and Aline is, of course, from PSCU Credit Union. Aline has stated in the chat, and it's quite a nice set of comments. Aline, did you want to unmute and share your thoughts with us? Or do you prefer for me to read your comment? I'm just checking to see whether Aline is going to unmute. And so we'll go to her comment in a bit, but what I'd like the panelists to think through in their minds, a preparation of how do we respond to threats of cyber attacks. Have you had any experience with this already having happened with any credit union in your jurisdiction? Okay, so I haven't seen Aline on mute, therefore I'm going to read her comment. She said, making our young persons financially literate is important from a young age. The approach can start with school-aged children and work all the way up to adulthood. At PSCU, we have engaged in financial literacy webinars that focus on various life stages. We also pair that with a focus on the types of products applicable at the various life stages. We also have a youth arm among our membership and have specific focal areas for them under our education committee. The intention is for them to create a youth board so that there's an eventual handover to our younger members. Very nice approach. And I really love that idea of a youth board as well. So they get to mimic the idea of their role in governance, to understand that fiduciary duty that some of our panelists spoke about earlier in preparation for they being able to take over in time to come. So thanks so much for sharing those thoughts with us, Aline. So we are talking about governance and risk and the importance for board members to themselves understand the use of technology and some of the risks that exposes the credit union. So what has been your experience? Do you find that because we have already identified it's more the agent population that your members as well as forming your boards. So is there a measure of adverse thinking with respect to adoption of use of technology? Do you think there's sufficient recognition of the risk of cyber attack and what that is likely to result in? So Lottoia, let's start with you in terms of how do you find your boards currently reacting to preparation for cyber attacks? And is there the financial wherewithal to be able to respond?
All right, thanks, Kamla, again. In terms of my board responsiveness to technology, cyber attacks, our board is embracing, and knowledge is power is one of the things that we always advocate. And so in terms of understanding the environment that we're in, you understand, they ensure that we have training and that we're equipped, and they too at the board level are equipped to be able to answer to certain, when we send in propositions and we send proposals, that they're able to analyze them. So they're analytical in their approach, they offer advice and guidance, and we work together to be able to have the best outcome in terms of what is happening. So we look at our strategic plan, we look at our risk management framework to see what do we have in line to protect. In terms of, as you say, shared costs. Over the years, we've had shared costs in terms of even IT. But as the years moved along and the risks the board would have championed and said, no, we need to have that internalized where we have control over certain systems. And so, yes, they understand the importance of it because at the end of the day, they know that they are totally responsible for the oversight and the governance. And so they understand and they impart that knowledge and they keep us, they drive us to ensure that we on the ground who have the daily responsibility are administering, are functioning, are leading, are directing the company in the way that they want it to. All right. And in terms of, you had asked about AI. So far, we have not really, we're still in the stages of analyzing where AI really can take us. And so we have not introduced a lot of it in terms of even some marketing discussions. And they've been saying you could use AI, but you know, because of the risks involved and because of where it may lead, we have still, you know, we're still those waters, we're still, you know, taking our time to maneuver through those waters. So we are doing our studies, analyzing and see what's happening in terms of AI. We know that it's a powerful tool, but we know that the risks behind of it is what we want to ensure that we are equipped for as we move forward. I can tell you as recent as Monday, I was in an interviewing someone and they said, well, you know, in their role for customer service, not in the financial sector, but in another sector. And they're saying that they have outsourced that, they have AI answering the phone and different things. There's some, you know, there's some challenges there because the human aspect, where we are able to show empathy. I am not sure in terms of the credit union movement and what we stand for. I'm yet to say, yes, let's AI answer the phones and be able to respond. You know, you want that human touch, that credit union difference is what we continue to push, but we still are analyzing where the future will take us and what we need and to put measures in place to safeguard our next moves.
Very good. Thank you, Lottoia. Certainly, it's where a lot of organizations are with respect to AI. Taking time to understand it, yes, there are great opportunities that may come with it, but being able to manage what risks face the organization as well. So Sherry-Ann, any thoughts from you in terms of the current members of the board and their understanding and preparation for using digital platforms and then the likelihood of the risk of a cyber attack?
Yes, I would say based on where we are as a credit union sector right now and the approach or the nomination process, so the selection of your elected officers to serve on boards and various committees, it is one that, and this is my view, that it's not providing the level of fit and proper expectations that are required from a governance perspective. And that's basically like the elephant in the room that needs to be addressed in order to have expectations of clear governance, clear risk management, clear leadership. You know, you can have officers serving on various boards or committees without the proper business acumen, because you can be a popular person, your membership loves you because of one particular thing that you may have done or said at an AGM, and you are elected on a board and you are asked to make the decisions that basically you're managing billions of dollars. And that's one of the risks that credit unions are faced with. Unless the legislation addresses that process, we will always be faced with those challenges. Notwithstanding, you have, I guess I would say, persons who don't have, or the board, because you're looking at a board as a collective unit, you may not have all the relevant expertise on board. You have boards where an executive management team would be hired to manage the organization. The board will perform the oversight role. What you see happening in a lot of instances is there's a clash between that oversight and that management. There must be a clear line drawn where you're sitting on a board and you don't have to have all the necessary expertise on board, but you have to be able to rely on your management team to guide and provide the necessary recommendation where collectively as a unit you can sit, you can assess the proposal or whatever recommendations are coming to the board and make the necessary decision. And then we also have the succession planning, which was raised by Tamika, where at the board level you may have directors sitting on boards and on committees for a long period of time. And when you look at what could be significantly shown as growth within the particular credit unions, you don't have much to speak to. And then based on where some of the directors are, the ability to evolve and align themselves with what is happening externally is not there. So you find the credit unions who are exposed to that level of risk are left behind. They cannot keep up with what is happening. There are misalignments between the management team. The management team would understand, and vice versa. You may have a board that don't have the right management team to manage the credit union. So in these instances, you have to now ensure that there are alignments in place and that it is based on best practice, international standards that can guide what is being done. From the AI perspective, I would want to start by saying, at this point in time, based on credit unions would be aware of what are their current situation with regards to their data. Because you can use AI to analyze what you have as your data to give you information to make decisions. As I would always say, rubbish in, rubbish out. So you have to ensure that that data is cleaned up. And that's where we are not as a sector where we are supposed to be. So we want to start with treating with that problem first. We also need to ensure that, yes, you can have the information that will be easily obtained from the AI technology. But if you don't have the human resource to really take that data and make the right decisions, then it's really not relevant to the situation of the credit union. There must be a systemic approach of the operations of the organization that will ensure, as we love to say at Hackon, the 4 Ps, your processes, your product, your plant, which is your infrastructure, your technology, and the people must be aligned together, because you can have the best of either. And if it's not aligned together, the output is not what you're looking for. So AI, yes, we are ready for it, but we need to fix that data and the product and the platform that we are going to be generating the information from. Yeah.
Understand, Sherry, and yes, thank you so much. And definitely that makes a lot of sense in terms of first knowing what is the data you need, ensuring that your data is accurate before then unleashing AI to guide you, because we already know of hallucinations, which AI is very capable of sharing for us. And so you move forward with advice from AI that just does not work for the outcomes that you want. So a very important point. And I see that Andre Padia has put a comment in the chat for us. Andre, would you like to unmute and share your thoughts with us? Just giving you that opportunity. There we go. So Andre has...
Good afternoon, everyone. Good afternoon, panelists. My share was just basically reiterating that, my belief that, artificial intelligence, AI, should also be utilized based on, well, the country's evolving needs. Because sometimes, we have a habit in businesses that we go the latest fad because everybody else is doing it, and not realize that each of us are in different stages in our development, our needs, our resources to accomplish those needs. So we have to be, yes, there's the AI, but we have to be mindful of using the AI in conjunction to what our needs are, understanding it, and then effectively using and managing, implementing that so you get the best impact. And I draw reference to Sherry-Ann's point in terms of that data. really, she's correct in terms of garbage in, it really be garbage out, you know, and you can have the best platforms, best AI, but if it's not training you right on accurate data, you have unnatural results coming out from what the people element has to do. So it's really a total marriage that has to take place. But for me, the understanding of where you're at and how you build and use the tool, remember, it is a tool, how we use the tool now to make the transition a reality in the best effective way for the organization. That's just my share. Thanks a lot.
Thank you, Andre. And may I ask your thoughts as you were on the floor? The notion of shared services and whether credit unions may be open to having that kind of partnership. What are your thoughts on that?
In my view, and let me share some background. I'm the CEO of PSU Credit Union. This is my 4th month in the seat. So the credit union industry as well is also an excellent learning for me. And that's why I'm so enthused by all the sharings from our sisters of the islands and so forth, and locally as well. And for me, in terms of really understanding the complexities that take place, because I was doing some little, minor research in terms of how the credit unions in the industry in the United States operate, where they have branches where you can go into a competitor, inverted commas, credit union, and transact business, right? Because they have that shared service platform to some element where, yes, they are competitors, but they stay true to the overall arching gambit of what the credit union movement is about, which is creating a space for all members to benefit across the board. Sometimes, and I'm looking at it because I'm learning still, in terms of the Caribbean, our culture is somewhat different, right? Trinidad's culture will be different to Jamaica's and vice versa. And the way we may approach a shared services platform might work excellently in Jamaica, but it may be somewhat different in Trinidad experience because our cultural makeup, historical makeup, the financial capabilities of our country and region, and the willingness of the people within that environment now to buy in to that approach. Because sometimes we might find ourselves, we so competitive that I don't want to open up my environment for people to know what I do and vice versa. So I think we have to come over that hurdle and look bigger and broader. I think Sharon mentioned that earlier on when she did her first presentation. We have to look bigger and broader in terms of how we view the movement, how we see ourselves as ambassadors for that change, and as well as really be open to a platform where we generally want to share our knowledge, experiences, pain points with no embarrassment, and learn from it and create a structure that will benefit all.
Thank you so much, Andre. We really appreciate that input from you. I love that notion that you shared that your research is revealing from the US in terms of accessibility, where you could go, you belong to one credit union, but you can go to another and be able to access services because of the philosophy of the credit union movement. This is why we are here, so we can support each other. But your point is also well noted in terms of the differences in our culture and therefore willingness to buy into that type of thinking, because the banks have done it to an extent in terms of using common platforms to be able to deliver links services. So it's not unheard of, and possibly what it needs is that quality of leadership as well. Introduce the idea, have the discussions, take care of people's concerns, look at it again, and begin to focus on the many benefits that would come for the members if it is that you were able to build that kind of culture where you can share not just the cost of having to invest in the technology and manage that risk, but also be able to share the value of the movement in such a way that a credit union member simply appreciates being part of the movement as opposed to any specific credit union.
Yes.
So,
and just to share too, I believe that's a unique superpower that our respective local and regional leagues, have, if they come together and have that type of discussion, could help pave the way to open a discussion within the specific countries themselves. And I think it could foster from there. Thanks again.
Thank you so much, Andre. And I want to bring the discussion back to an issue that Sherian brought up earlier too, in terms of the nomination process and the risks that is associated with who are the persons you select onto your boards. Because this discussion with Andre points to us the importance of having the right type of leaders who have that open mindset, that willingness to think beyond the traditional credit union, the behavior as we know it, into understanding not just the multi-million decisions that you need to make with your projects, but being open to understanding global practice and having the skill and competence. So let's talk a little bit about that nomination process and how is that working out with our different credit unions? Is there a willingness to see a level of rigor happening with our nomination committees, or are credit unions averse to that idea and still in love with the notion of someone stands up, makes a brilliant point, everyone laughs at the AGM, and suddenly they've been invited to serve on the board? Who would like to go first on that point?
All right, so let me take that one, Kamla. Here in Jamaica, what has happened over the last probably 3 to 5 years now is that we have moved away through our Department of Cooperative and Friendly Societies, recommending to credit unions that they move away from the nomination from the floor option, and to instead look at nomination by petition, which allows the credit union nominating committee to really, identify the skill set that they would need to put this out to the membership, and for persons who have that skill set to make their applications, and then it would be vetted from there, so that you are very targeted in terms of the caliber of persons who you need, the kind of experience and skill that you need on the board, because more and more you're finding that you really need the skills in different areas. You need HR competence, you need legal competence, you need persons, of course, who have financial background. You also need persons now who have risk and compliance management skills. So being very targeted in that way will help with the improving the governance practices as credit unions move forward. And I want to say that many of our credit unions have now gone that route in terms of incorporating it in the rules, that is nomination by petition. And so we're gradually moving away from just having the nominations from the floor. You're not sure what the skill that the person will bring to the board. And of course, we also do the fit and proper assessment prior to those nominations going forward.
Thank you very much, Pheuona. I think it is something that most countries in the region are looking to move towards as well. So, and that the nomination committee actually does do a very deep dive scrutiny into the individuals in preparation for their being presented to the membership for selection. Lottoia, what has been your experience? How is that working out in Antigua and Barbuda?
Okay, over the years, we have also moved to the nomination process and moved away from the floor nominations to ensure that the skill sets that we require, we're able to get it from our membership. And there are times when we reach out to persons based on the skill set required and based on our knowledge of our membership. And then we would reach out to them, contact them, and ask for their interest. And we also advertise on our social media and through emails. We send out blasts to our members, asking them, advertising the nomination process. And it's there and it's vetted, and they are there to be able to contribute. As I would have mentioned earlier, that while we understand that, each person, everybody will not have all of the requisites, but the skill set should be there in critical areas that will move the credit union forward. And so it is key that these volunteers come with some level of skill set so that we're able to build on it through training. The mindset years ago was that you come as a volunteer and you learn from the credit union. But based on credit unions being significant financial institutions and the way we are governed and the risks associated, we need to have certain skill sets at hand prior to you becoming a volunteer. And then you can harness the rest of it through your knowledge of the credit union. So we do, reach out to persons, and we have the nomination process, the vetting, the nomination committee go through and they vet, and then we send to our regulators, financial, FSRC, and they review and they give their approval, yeah or nay, based on the proposals that are sent for the volunteers.
Yes. Thank you very much, Lottoia. So it's really great to see this move towards ensuring that your quality of directors are
Yes.
persons who would be able to carry out the duties, the function that is expected at the governance level, so that there can be this kind of growth in credit union movement, because really strategic direction and accountability resides with the board of directors.
And Kamla, if I might just add, one of the key criteria as well, sorry, is that you have term limits, so that boards have, a set time, board members have a set period within which they are able to serve. And then you have that natural rotation. So that is something as well that credit unions have now adopted and coded in their rules.
Yes.
Excellent. So then the issue really moves to succession planning and really grooming those individuals who in turn will be able to reach that space where they can carry out those functions. Sharian, it was you who raised the issue though. Is it that you would like to see this incorporated as part of the legislative package of what credit unions are expected to follow? Why are you seeing this to be one of the risks that credit unions face?
Well, firstly, credit, it is part of the legislation, even the legislation that exists now. There is some level of control in place or rules with regards to the nomination. What is lacking, and I was really happy to hear Lottoia's perspectives on it, because this is where in Trinidad and Tobago, our nomination process, in some instances, I'm not saying all, but the policies that guides the nomination process is not there. So while a lot of credit unions would have removed voting off the floor, you have the nomination process, you have the nomination committee, but the process in itself does not meet the required standards. So you are faced with the same issue. On the floor, you still have the option of some persons seeing exactly what that process flow goes through, in terms of someone would stand up and nominate another individual, and that person gets recommended, approved, they're on the board. However, the process through the nomination committee is not clearly articulated through policies. And while the legislation would speak to it, if the credit unions do not ensure that they have a policy that guides the behavior of the committee and by extension the board, then we're faced with the same situation. And what I love most about what Lottoia said, the regulators had to have sight of the directors or the potential directors, because that is the second line of defense there from the nomination committee. So you will see a lot of transparency. So I think from the nomination process, if we in Trinidad can have that approach or adopt that approach, it will work better for us.
Understood. So you're quite right. Sometimes it is that the structure may appear to be there, but is it working to give you the outcomes that you want? And I guess that is the level of vigilance that you want to have for each of the credit unions to ensure that you have an effective board that will be able to identify and manage risks facing the credit unions. So this has been a really great discussion. I have learned a lot in terms of where we are at in some areas of challenges facing credit unions. I personally love the credit union movement. I am so thankful for it. I believe it truly strengthens our societies and person's ability to be able to manage, especially in modern day life. So we hope that everyone else who is present who have really enjoyed and benefited from the conversation today. We have put the survey link in the chat to get your feedback. So we would appreciate if you do tell us what you think in terms of your experience here with us, as I invite our panelists to share with us some closing thoughts. We have really covered a wide range of areas in terms of risks that face the credit union, from the people themselves, the quality of the individuals who serve. We have looked at the use of technology and whether we should be embracing AI, at what time and in what form. We have looked at the weaknesses that may exist with respect to technology and therefore the potential for sharing that risk by partnerships and coming together of different individuals. And so one of the areas that I think we may also want to identify is how do we build this level of awareness among the membership itself, so that even before someone becomes a director or, have a senior position within the credit union, because the power still resides in the hands of the members. So how can we ensure that members themselves become so much more aware, so that the way in which they vote, their expectation of how the credit union is managed, that they bring that level of awareness into their decision making. So Pheuona, I know because this is part of your responsibility as the Credit Union League in terms of training and development and awareness and that kind of thing. We'll start with you, then go to Sherry and hear her thoughts, and then Lottoia to close off for today. So Pheuona.
All right. So from the league perspective, what we encourage credit unions to do is to get back to that place of having member meetings. And now that the technology has enabled us to be able to do this virtually. So it doesn't have to be physical town hall sessions, although those are held sometimes, but you have this platform to be able to reach many of your members in a more wider space. Credit unions as well, at their annual general meetings, at times they will have a little convention section where they speak to issues outside of the formal meeting. And so we find that those engagements also help to bring some of these issues to bear. We are seeing a lot more engagement in terms of, communicating through the various channels, the WhatsApp, the text messaging, the website, in terms of, bringing awareness to some risks that are attendant to the members themselves. So how to secure yourself from fraud and this cyber attacks. So we're seeing a lot more of that as well from our credit unions, and we encourage them to continue to have the dialogue with the members, certainly to bring back those member meetings, which were, in the former years, they were more frequent and more targeted, but over time it had waned a bit. And so we encourage that re-energizing of those sessions.
Very nice. Thank you so much, Pheuona. So let's hear closing thoughts and comments from Sherry-Ann.
Okay, so in the context of governance and risk in the sector in Trinidad and Tobago, I would like to leave or state 3 key areas that I strongly believe need to be addressed. Firstly, an understanding and commitment to a proper governance regime that would encompass the external legislation and internal policy framework. It starts there. And then the requisite leadership that understands these concepts and can apply them to the context of the strategic leadership of the organization. And that is to achieve the goals that would be set by the leadership team. And most importantly, and we heard it a lot today, membership edification and onboarding. Because there is the risk of losing members and becoming extinct, because at some point in time, our agent membership will not be there. And most importantly, members not fully grasping what the philosophy of the credit union and the principle of ownership. The principle of ownership basically gives each and every individual the opportunity to vote, make decisions that will impact the credit unions going forward. And that edification process is critical, really critical. So that's the 3 areas that I believe once we pay attention to, once the credit union come together, the sector comes together and deliver on those 3, you would see a positive impact.
Thank you very much, Sherry-Ann. Lottoia, your closing thoughts, please.
So in terms of corporate governance and, we have leadership, we have directors, we have it here in this session. And so I just wanted to remind persons about the principles and the fundamental success of governance in a credit union, where we have the code of ethics, we have teamwork, communication, having frequent meetings with our membership, sending emails, social media, training sessions, lunch and learn sessions, so that they can learn from us, they can understand why we're here to improve their lives, so that they will stay connected. We have transparency, effective reporting, regular financial audits, internal controls, performance review, performance of our staff, management, and the volunteers, and even an introduction of the whistleblower, where you can alert board members of what is happening. Remember your fiduciary duty, that duty of care, the duty of loyalty, and the duty of good faith, in terms of remembering that if it is that anything goes wrong, that you are held accountable, you are responsible for members' funds. And so in terms of your decision-making process, ensure that your decisions are firm and that you would have done research to support the decisions that you're making. And in terms of management, to make strong proposals, do your research, do your homework, ensure that you've identified the risks, you've analyzed, and you've had strategies in place to protect the institution before making these recommendations, right? And so in terms of the member confidence in a credit union, it is strengthened when it is governed effectively and provides regular, timely updates to our members, remaining transparent and keeping them engaged. They want to be able to have a say. It's their credit union, so allow them that opportunity to share with you and you share with them. And we can only go from strength to strength if we work as a team. Each sector work together to be able to strengthen. As credit unions, we should understand that we are not competitors, right? We are part of one big family, so each one help one. That's the principle, that's the foundation of why we exist. And so while we will compete against the banks and the other financial institution, the microlending, as credit unions, we should have that partnership, that working together to be able to be stronger together and be that force to reckon with the banking industry. be that strong credit union in each of our territories and network across the region so that we can all be stronger together. We have knowledge, we have expertise, so let's work together and just make our credit unions a better place.
Thank
and
you.
I'm thankful for the opportunity.
You're most welcome, Lottoia. We thank you. Thank you, Lottoia, Auguiste. Thank you, Pheuona, Reynolds, and Sherry and Joseph. This was really a tremendous discussion for us to look at governance of the credit union movement, because as Lottoia just said, with so much passion, so wonderfully, how important this is. And how much value there continues to exist for all of us who are part of the credit union movement. This has been part of our series in ensuring that governance of credit unions is strengthened, that we all can continue to have a credit union movement that allows us to not just benefit, but continue to take pride in. So this really has been the first in this series for this year. So we will be coming back again. Each of the three of our panelists, this were the first time serving as panelists here at CCGI. So we thank you so much for taking the time and preparing to come and share your thoughts with us. To all of our participants who have been with us since inception today at 2 hours ago, thank you so much for taking the time to also connect and listen and share your thoughts, those of you who also participated. This is the space that allows us to really grow.